All right, let's talk about the mystery charts and the methodology in action. Here's a mystery chart reveal. You can see it was at a pretty decent uptrend and it pulled back. Also, it was persistent and accelerating and all those good things that I talk about. There's your Landry light. You can see it was a long time before those lows touched the moving average, 60 days or so, as illustrated down below. There's all the parameters, and let's take a look at what happened. Entry's there, stop is there, initial profit target is there. This is the mystery chart. See, I'm showing you ahead of time. So let's see what happened. Well, not much, but no capital was put into harm's way. So I decided to pull the setup because it began to lose a little steam and just started trading sideways and chopping around a bit. And I didn't feel like it was worth going after anymore. So I pulled that one. Now this one is still a mystery chart, or is it? It was in a somewhat gradual trend, then it began to accelerate higher. Those are things that I like. Acceleration, persistency, very important. And then it had a TKO type of move, so I called it a TKO, and that's when it went on to service. And then it pulled back a little further, became a Landry light pullback. The entry was there, stop was down here, and initial profit target was up here. So we'll follow up on that one in coming weeks. Good, bad, and indifferent. Oh, actually, this just in. This one is no longer a mystery chart. This is SLDP. It triggered a little while ago, and I'll come back to this one in just 1 second. Fortunately, unfortunately. Anyway, you can see it blew through that trigger very decisively this morning. So far, so good. Put all your college kids' college funds into this one. I'm joking. All right, we have a new mystery chart. You can see it was in a gradual uptrend, then it began to accelerate higher. Pulls back fairly orderly to the moving average. This is a Landry light pullback. Parameters are down there. Entry is here, stop is here, initial profit target is here. And so far, this one has not triggered. Here's an update on the mystery chart. This is TGEN. You can see, again, longer term uptrend, very persistent uptrend, and lots and lots of Landry light. Pulls back to the moving average. Persistency, as I preach, is a market's ability to go up day after day after day after day after day. One thing I love about teaching is I'm able to see these things unfold, and I learned a lot. I learned a lot in the process. What's the old saying? Watch one, do one, teach one. You know. And as I said before, I remember first time I was in Italy, and this screen was huge, biggest screen I've ever been in front of in my life, and these bars were 3 and 4 foot tall, and I was able to see patterns such as persistency just so clearly in the screen, and it made me realize how important even shorter term persistency is. So I mean, this nice long trend started off as a really persistent shorter term trend. So I would urge you to do that. I know I'm a nerd and geeking out on this kind of stuff, but there's something there with persistency. Now mathematically it's equivalent to linear regression, but I just like to draw a line through as many bars as possible. Very awesome concept there. Pull back to the moving average, that's a Landry light pullback. There's all your parameters down below for TGEN. Entry was here, stop is here, initial profit target is here. Now remember, when you hit the initial profit target, as I preach, we're going to take off half of our shares. So this is on a hypothetical 100K account, but I do mimic these trades exactly as I put them out, unless I make a mistake like this morning, which we'll get to in just a minute. I think admission of guilt is important. That's all part of accountability. I hope I didn't say important like the kids are saying nowadays. Anyway, so 976 open as of yesterday, and it's doing okay today. So that's going to be a little bit bigger number. VG, mystery chart update. You can see the parameters down below. Again, that reoccurring pattern of gradual uptrend followed by accelerating uptrend. That's something I like to look for, as I often preach, and also keep an eye out for bigger picture technical analysis. Not to trade off directly, but if you see a bow tie within a cup and handle or a Landry light pullback like this within a cup and handle, usually, and usually being the keyword in that sentence, that's a very powerful pattern because you've got a bigger picture technical analysis type of pattern working behind you. Anyway, pull back to the moving average for a Landry light pullback. Entries there, stop is there, initial profit target is there. So far, not so good. We have a loss of $1,182, and that number is going to be a little bit bigger if I would have to market it right now. So far it's dead money. Should I get out? No. Follow the plan. See what happens. Okay. BTM, the other one's not doing so well. Again, nice gradual trend, accelerated trend. Look at how persistent this move was here, day after day after day after day. Then it really began to accelerate higher, pulls back almost to the moving average, but that's a pullback, right? There are your parameters. Entries here, stop is down here, initial profit target is up here. And again, so far not so good. We have a loss of 878, and that's going to be slightly worse with today's numbers. So again, dead money. Should we get out? No. Follow the plan. Let's see what happens. Now, hopefully one of those takes off so I can say, you see, but even if they don't, we've got plenty of dead money examples, a couple this week, in fact, to show that following the plan is the way to go. Again, nice uptrend here. Now, in this particular case, because the stock has begun to move so far, it doesn't look that impressive. But if you were to zoom the chart back or back the chart out a little bit to the day of the trigger, you'd see it looks a little bit better. But nice Landry light, pull back to the moving average. There's all the parameters. Now, this is a defense stock, by the way. Defense has been hot, right? So buy hot stocks. Don't buy good companies. Well, buy good companies if they're also hot stocks. And I'll touch upon that in a second. Entry was there, stop was there, initial profit target was here. Now, this is on a hypothetical 100K account. Again, I do take these trades, but I take them across multiple accounts. But I have one account where, like, if I say buy 400 shares or whatever, I'll buy 400 shares at that account. But this hypothetical number here, $1,000, is based on a $100,000 account. So we're taking a 1% profit overall, and we're going to let the rest ride and see what happens. Now, when you do get that 1% out, okay, so you would be at $2,000 total, okay? You take off $1,000, and that puts a little money in your account, helps to keep the lights on, as I'll reiterate in a minute, might help to pay for some plumbing problems, etc. And then you trail a stop higher on the remainder, and hopefully you're with the stock for a long, long time. How long, Dave? Well, sometimes several years, sometimes even longer. And that's the ideal thing, is to get into a shorter term trade and have it morph, so to speak, through a little money management into a longer term trade. I got an email from somebody recently. It's like, oh, Dave, remember back in the day, 20 years ago? I'm more of an investor now. I'm no longer a trader. It's like, well, I'm an investor too, as Greg Moore says, what he named his book. He invests with the trend, okay? And so I'm an investor, but an investor with the trend. And I don't want to be in and out like a rat going for the cocaine. I'm guilty of doing those things, don't get me wrong. But as far as a core methodology, I want to stick to the plan. I want to follow the trends. I want to be taking those partial profits and then trailing that stop higher on the remainder. So we had 23.40 open on the KTOS. Now this one's getting a little choppy, a little sideways, a little dead money, right? But we're going to see what happens. And keep in mind, on 100K, so 1,000 plus 2,300, that's a 3.3% gain overall with just one stock. So that's not bad. So again, becoming a little dead money in here, but that's okay. We're just going to follow the plan. Here's KGC, which is a gold stock. Gold was hot. Gold was not hot for a while, or went sideways for a while, then it took off again. So again, another testament for following the plan. We got in way back here. It's kind of a double top knockout type of pattern, Landry light pullback and other stuff. You can go in and watch if you go to my YouTube channel, youtube.com/Dave Landry, there's the Methodology in Action series, and I cover all these before we get into them So you can see what I was thinking and all. Also, you can go to, while you're on YouTube, if you go to the core methodology playlist, the core methodology trading service playlist, you can look at all these trading services. So the day I recommended KGC, you can go back and see what I recommended on that day, and the day I recommended some of those turds, you know, you can see that too. And then you can go to davelandry.com/archives to look at them longer term. So the newer ones are newer, probably like a week old, depends on how everything triggers and shakes out. It'll be on YouTube. And then the older ones, davelandry.com/archives. It's amazing. I'll get like a dozen emails from somebody thinking about joining the service, and they'll go through all the due diligence and checks and ask me 1,000 questions, you know, like, well, are you going to quit doing this someday? I'm like, well, yeah, someday, yeah, but I mean, I'm doing it for 20 years or however long it's been. I don't see any reason to stop in the near future, because it's providing me with analysis that I get paid to do, and I'm forced to do and forced to follow, though I don't always follow it, as I'll show you in 1 second, a little admission to guilt again. So yeah, I'm going to keep doing this, and then they'll join, and then they'll look at years of recommendations and stuff, and they'll go through all this stuff, and it's like, okay, you know, this guy's done his due diligence. I think we might have a solid client here for many years to come. And I do have some clients that have been with me for decades, believe it or not. Anyway, you know, a few days later, they quit. You know, it's like people just don't think in longer term, and they expect just to make money right away, like all the YouTube gurus in their Lambos, or rented Lambos, or rented jets. They never go anywhere in these jets. They always just sit on a tarmac with the jet. But anyway, that's another story altogether. It's not a get rich quick deal. It takes time, and it might take 6 or 8 months to catch a good trend like we're in now. It's like, these are the ones that we have been waiting for, and you chip away at it, chip away at it, chip away at it, then bam, you get into a nice trend like this. And I hate to use the word hope, but hopefully ride it for a while. And if this trend continues, we should do just fine. And if you go back and watch a couple of weeks ago, I did the peak to trough analysis. So the market had a pretty bad spill early this year. It went into a bear market, technically went into a bear market, or certainly dipped into that bear market territory, which the media defines as 20%, and then it subsequently recovered. Well, we made money on the way down, we made money on the way back up. Now, we lost a little bit when it started going down, and then we lost a little bit when it started going up. And that's like the hokey pokey. That's what trend following is all about. Anyway, the initial profit target was up here, and you can see that this was probably one of the mother of all dead money reports. That's about 2 months, just kind of eyeballing that, where you're slightly profitable for the most part, but you're not making any forward progress. And I guarantee you that most people would have given up during that period. I would have probably given up during that period had I not had this trading service to follow, okay? And you to report back to me following it. Anyway, so finally it hits that IPT. After all that dead money, again, your stop goes to break even. And then as of this snapshot, there was 2020 open. So again, about 3% overall on the account. TFPM, another one of these gold stocks. Entry was there, stop was there, initial profit target here. Now, initially we made a little money here, and then we started losing money, okay? And if you go in and watch the prior methodology in action, I'll walk you through all that drawdowns and having to wait through it and just let things unfold. Again, I know, easier said than done. Anyway, so $1,000 bank, 476 open, so that's 1476 total in profit. So far, so good on that one. It's up a couple of bucks today, so that number is going to be a little bit better. And again, like I said a second ago, it was dead money back there, and look, it became dead money again. And what's happening today? Does it always come back? No. Am I interviewing myself? Yes. Who was it? John McCain. Dave Letterman used to have a bit where it was John McCain interviewing himself, and he would just, you know, am I concerned about this? Yes. Will we do something to make it better? Of course. Now would be a good time to kind of reiterate the point I've made quite a bit. You know, like right around now, and I guarantee it's going to happen unless they watch this webinar, they won't do it. But somebody's going to email me and say, Dave, I'm out. I'm like, okay, do you mind telling me what's wrong? What could I have done better? He goes, well, I can't make any money. This has happened many times, so I'm not making fun of any one individual. And of course, I'll be like, well, did you get that TFPM? You know, we've got nice little open profits there. No, I didn't get that one. What about KGC? No, I didn't get that one. KTOS? No. How about the TGEN we just talked about? Did you get that one? No. But I got those 2 turds you recommended, and so far I'm losing my ass, and so I'm out of here. It's like, well, you know, nobody's that good, right? Nobody's 100% accurate. I would rather be less accurate and make more money than more accurate and make less money. And I think Eckhart has done he's got a few quotes about that. And I think the percent correct is actually can be inverse to longer term performance, because if you have a high percent correct, there's a good chance you're going to blow up. Okay. Anyway, shifting gears, any questions on all that? Just let me know on the fly. I know YouTube's about a minute behind, but I'll catch up to you first chance. All right, we had an OGRE this week, and I actually lost money on this trade. I got a little anxious and got in a little early. Whether or not I did the wrong thing, I probably need to do a little more forensics on it, but probably would be the answer there. But after I lost money on it, I decided that, well, it still looks pretty good. I think I'm gonna go in for a second stab. And I did end up buying some options. But anyway, so I posted this chart to my Facebook group. There was the entry, there's a stop. With an opening gap reversal, just real quick, without going into a long lesson on them, because we've talked about them quite a bit. You want to have something that looks really good, something that you would take as a pullback in and of itself, okay, as a general statement. And what you're looking for is that reversion to the mean move back to the direction of the trend on that gap, okay? So what happens on a gap, if you think about it, is there's I guess a vacuum as far as bids are concerned, or nobody wants to buy the stock, everybody wants to dump it. So whoever the market maker is, he's going to lower his price as low as he possibly, or even legally can. I don't know if there's a legal thing to it. And knowing that if he's buying these shares that you're trying to push onto him, he wants to make money. He's got to feed his family, right? So he wants to make sure that he can buy it at a low enough price that he can flip it out later in the day at a higher price. So you're kind of jumping in with the market maker on these opening gap reversal type of trades. And when you're doing that, you want to be looking for, it's kind of somewhat of the opposite in some ways of what we're normally looking for in the core methodology. We're looking for the TGEN, which is a hot IPO. I don't know if I think I showed that one earlier. Yeah. So TGEN, which is a hot IPO, or KTOS, which is in defense and hot sector. And those are kind of medium cap to small cap stocks. But in the opening gap reversal, you want a lot of liquidity, okay? You want a lot of people that are trapped on the wrong side of the market looking to dump. And then you're looking for, obviously, the bottom fishers to come in and the market makers to looking to be again on the side of the market maker. And then all that creates a vacuum back up sometimes. Anyway, I did pick up some options on this, and that's another one of those many little things I probably need to put in here for the more advanced traders. Always check your options, because I lost hundreds of dollars per account on this thing, where I could have put in like a fourth of that amount and just bought options, okay? And I did flip out some options this morning on this one because they were cheap enough. They were like 30 cents each, okay? And you got to be careful if you end up in that S&G trading, but I just thought it was worthwhile. But getting back to the stocks you want on your OGREs, and again, go to watch the prior presentations. But you want a well-known company, okay? If it's a thin stock and nobody's heard of it, the people who are trapped on the wrong side of the market may have dumped, and you might not have any buyers waiting in the wings, okay? But if it's a big, thick stock, and we don't know who's going to be buying it, right? But let's say you're an institution and AMD has been one of the hottest stocks out there, okay? Nice longer term trend or whatever. So you want that stock in your portfolio, but you forgot to buy it or whatever. You get a big gap lower, you could rush in and buy that stock at a bargain, so to speak. Okay, and that could be one of the people that are looking to trade on those opening gaps like that, of many. Now, one thing in more recent years, and I probably should pay more attention to it. Again, maybe this is another million little things, but is OGRE +1. OGRE, by the way, is opening gap reversal. One of my clients named that. I don't remember which one, but it stuck because it just made so much sense. Just put a little OGRE guy on there. But anyway, so OGRE +1 is just, you have a gap yesterday that doesn't really materialize, but the next day it begins to take off. And years ago, I helped somebody with a trading service, and we actually have one client that didn't look at the setup on the day that was recommended. He took them the next day. This was a day trade service, so whatever was recommended was made to trade as a day trade on the following day. But we had one client that he would it was a fax service back then, so he would literally put yesterday's fax, turn it down, face down on his trading desk or whatever, and the next day he'd flip it over and trade it. And that was kind of a valuable lesson for us to learn too, is maybe take a second look at some of these things. And the OGRE +1 could be really cool, and it finally gets going, but everybody kind of forgot about it. And then when it begins to take off again, all of a sudden maybe these people rush back in. And so that's what's, knock on wood, is happening today. It looks like I might recoup some of my losses on that. But yeah, I was probably a little too aggressive on this one, but once it did its opening gap reversal gyrations, or opening gap gyrations, I should say, then this is when I put it in Facebook with an entry above here and a stop down here. My Facebook group is Dave Landry's Trend Traders. You do have to be at least a gold member of my website to participate. We've got some really good traders in there. And I also am in there putting out occasionally recommend a trade, and I also remind my peeps to do things that I've talked about, such as take a setup. Need to remind myself sometime. But anyway, opening gap reversal +1, I think this is something that you should pay attention to. If you're a little bit more advanced as a trader, these opening gap reversals, they don't come along every day, but if you just kind of chip away at it, eventually you find some pretty cool ones. And that's that second day one can really work. And what I need to do, there's so many things I want to do, but what I need to do is I need to make sure I'm paying, this could be another million little things. I need to look at that opening gap reversal list and put the ones that are interesting, write the ones that are interesting down, and the next day check back on the ones that I don't trade, just in case they take on the second day. And that might be the kind of what's the old saying? The early bird gets the worm, second mouse gets the cheese. It might be a second mouse type of trade. And just one more thing about the original trade that I lost money on, and then this is the post that I put into Facebook for, again, an entry here, stop here. It never did trigger. So Kevin Haggerty years ago told me that when they get a new guy in the office, I know I've said this before, but it's worth repeating. They don't let him take first signals. Okay, they give him a list of patterns or setups he's going to trade, and he's not allowed until he gets his feet wet to take the first signal. So he takes a second signal. Okay, so that's kind of the second mouse type of setup. So you wait for a trigger, and then you wait for a re-trigger on something. Now, of course, if you're a little bit more advanced in trading, you want to take that first trigger, because sometimes it'll trigger and not look back, and those can be your best trades. However, if you're new to trading, you want to get some wins under your belt. I was thinking about this before I went live. You want to catch, if you're trading the core methodology, you've got to catch a KTOS and a KGC and a TGEN, and I hate to say hope, but hopefully one of those three, or some of the other ones were long, will turn into a longer term trend, a much longer term trend. I mean, we've been in a few for a few months. I want to be in those for a few years. And once you get a few of those under your belt, you're like, aha, this could actually work. And that's vitally important. So if you were to try to do like this OGRE trading, maybe the second signal would be the way to go. And then maybe if you wanted to specialize a little bit, maybe you could do OGREs +1. And you know, maybe in my next life, okay, I'll look for opening gap reversals. And if I don't see any, I'll, you know, it'll be the next day. I'll have that list printed off or write it down, whatever I'm looking at. And next day I'll look at them. And if nothing triggers and nothing happens, then I sail off into the sunset or do whatever I'm going to do. In retirement, who am I kidding? I'm not going to walk away from these screens. But anyway, my wife might want me to do that at some point. I'm not going to get into Landry 100. We got too much other stuff going on, but I will just briefly touch upon it. And the point that I've been making lately is speculation is alive and well.